Hello everyone. In this video, let's let's solve a problem on ratio analysis. Unit 3, chapter name is ratio analysis. From the following, let's read the problem first. From the following, profit and loss account of a company for the year ended 31st 3 2010 and the balance sheet as on that date, calculate gross profit ratio, net profit ratio, cost of goods sold to turnover, operating ratio, stock turnover ratio, return on capital employed, current ratio. So we have to calculate these 7 ratios using the following P&L account and balance sheet. So let's see what the P&L account is. So profit and loss account for the year ended 31st 3 2010. Debit side, to opening stock 1,45,000 is there, to purchases 4 lakh, to wages 1 lakh, to carriage 60,000, to factory power 5,000, to gross profit 1,50,000. And credit side, by sales 7,50,000, by closing stock 1,55,000. So trading account is trading accounts total is 9,05,000. Coming to profit and loss account, to administration expenses, there are 3 expenses: postage, printing, salary, 5,000, 6,000, 19,000 respectively. Total amounts to 30,000 rupees. Next, that to maintenance expenses 35,000, to sales manager salary 10,000, to advertising 5,000, to preliminary expenses 5,000, to goodwill written off 5,000, to loss on sale of building 10,000. The net profit is 70,000. Coming to credit side, the gross profit 1,50,000 as brought down, by dividend 5,000, by interest on deposit 8,000, by profit on sale of investment is 7,000. So total 1,70,000 is there. And coming to balance sheet, liability side, equity share capital of rupees 100 each, so 4 lakh rupees is there. Profit, preference share capital, it is preference share capital rupees 100 each, 3 lakh rupees is there. Reserves 50,000, profit and loss account 70,000, BOD bank overdraft 35,000, creditors 1,50,000. And asset side, fixed assets 55,000, stock 55,000, debtors 50,000, prepaid rent 10,000, bills receivables 50,000, cash at bank 70,000. So total of 10,05,000 is there. So here, to solve the problem, we have to rearrange the income statement just like we did in second chapter, financial statement analysis. In that chapter, how we rearrange the given P&L account and balance sheet. Similarly, here also we have to rearrange them. So first we have to take the sales. So what is sales here? 7,50,000. After that, if there is a sales returns, it has to be deducted. So there is no sales returns, so net sales will be 7,50,000. Then cost of goods sold. So in this problem, cost of goods sold is not given directly, we have to calculate them separately. So how the cost of goods sold can be calculated? If the rate of gross profit is down, then if the actual gross profit is down, then it can be deducted from the sales. Or in another way, cost of goods sold can be calculated just like adding opening stock plus purchases plus all direct expenses and deducting the closing stock. So here we have taken the opening stock of rupees 1,45,000, purchases 4 lakh, then wages 1 lakh, carriage 60,000, factory power 60,000. So total amounts to 7,55,000. Closing stock is 1,55,000. It is deducted. Then the amount of cost of goods sold is 6 lakh. 7,55,000 minus 1,55,000, that is 6 lakh. After that, if we deduct the cost of goods sold from the net sales, we will get the gross profit. Now we have to deduct the operating expenses from the gross profit. So what are all the operating expenses? We have to see the given P&L account. So what are all the operating expenses? Administrative expenses, under that postage, printing, salary and maintenance expenses, sales manager salary and advertising. All these are operating expenses. So administrative expenses total in 30,000 is taken. Maintenance expenses, sales manager salary and advertising is taken. Total amounts to 80,000. And after that we have to add the operating income to the amount which we have arrived after deducting the operating expenses from the gross profit. So what are all the operating income? There is no operating income in the given P&L account. Next, we have to deduct the non-operating expenses. So let's see what are all the non-operating expenses given in the problem. Non-operating expenses are preliminary expenses, goodwill written off and loss on sale of building. These three are non-operating expenses. So goodwill written off, preliminary expenses, loss on sale of building, 5,000, 5,000, 10,000, total 20,000 is taken. Next we have to add the non-operating income. So let's see what are all the non-operating income is there in the P&L, given P&L account. So credit side of the P&L account, dividend, interest on deposits, profit on sale of dividend, interest on deposits, profit on sale of investment. These are all the non-operating income. One, two, three, 5,000, 8,000, 7,000, total 20,000. So if we deduct this, we will get net profit of rupees 70,000. Let's check how much net profit is there in given P&L account. There also 70,000, and after rearrangement of the P&L account, here also we got the 70,000. So this is how we can cross verify whether the rearrangement is correct or not. Now let's calculate the ratios which are asked in the problem. Balance sheet, the given balance sheet also we can rearrange them if it is necessary for the calculation of the ratios. Okay, so here calculation of ratios: gross profit The formula is gross profit divided by net sales. The gross profit calculated 1,50,000 and net sales is 7,50,000 into 100. Gross profit is 20%. Then net profit ratio is net profit divided by net sales into 100. Net profit is 70,000 and net sales is 7,50,000 into 100. So net profit ratio will be 9.33%. Then operating ratio. Operating ratio is operating cost divided by net sales into 100. How this operating cost is calculated? Cost of goods sold plus operating expenses. So let's see what is this operating expenses. That 80,000 we have taken. This one. Operating expenses. The total of this operating expenses is 80,000. Then plus cost of goods sold. Here this is the operating profit, 70,000. Operating profit. So for the calculation of operating cost we need 80,000. This one, operating expenses, total operating expenses is 80,000. Okay. So cost of goods sold 6 lakh plus 80,000. 6 lakh 80,000 divided by 7 lakh 50,000. Operating cost ratio will be 90.66%. Now moving to operating profit ratio. Operating profit is 70,000. Where is that? In the given, in the rearrangement of income statement, here it is, operating profit, that is 70,000. So 70,000 divided by 7,50,000 into 100. So 9.33% operating profit ratio. The next ratio is stock turnover ratio. The stock turnover ratio formula, cost of goods sold divided by average stock. The cost of goods sold is 6 lakh divided by average stock. Opening stock plus closing stock divided by 2. So it is there in balance sheet. Opening stock, the closing stock is there in balance sheet and the opening stock is in P&L account. If we add this, we will get 1,50,000. Let's see. Closing stock 55,000. Opening stock 1,45,000. 1,45,000 plus 55,000. Here also 1,55,000. 1,45,000 plus 1,55,000. Divided by 2. 1,45,000 plus 1,55,000 is 3 lakh, divided by 2, 1,50,000. So total answer is, stock turnover ratio is 4 times. Now return on capital employed. Return on capital employed, net profit divided by capital employed into 100. So capital employed, what we have to take for capital employed? Debt plus equity. So debt, let's see what are all the debts they have. Equity share capital, preference share capital, reserves, profit and loss account. There is no long term debts to add. General reserve, profit and general reserve, profit and loss account, equity share capital and preference share capital. They form the capital employed from the company. So 4 lakh, 3 lakh, 5 lakh, 50,000, 70,000. Total 8 lakh 20,000. 4 lakh plus 3 lakh plus 4 lakh plus 3 lakh plus 50,000 plus 70,000, 8 lakh 20,000. So net profit is 70,000 divided by 8 lakh 20,000 into 100. Answer will be 8.536%. 8.536% answer. Which one? Return on capital employed. Cost of goods sold to turnover ratio. What is the turnover? Is nothing but net sales. Cost of goods sold is 6 lakh and the net sales is 7 lakh 50,000. Answer will be 0.8 times. Then current ratio. Current assets divided by current liability. It is current. What are all the current assets given in the problem and what are all the current liabilities given in the problem? Let's see. Stock, debtors, prepaid rent, bills receivable, cash at bank, current assets, bank overdraft, creditors, current liability. So cash in hand, cash at bank, prepaid rent, debtors, stock, debtors divided by bank overdraft plus creditors. Total will be 4,55,000 divided by 1,85,000. 2.46 is to 1. The answer. So with this I end this session. Thank you very much.